Welcome back. I'm Pratap here. Today is 29th October 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you please click on the tab post. Some of you might be seeing the tab community. Click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please find our Telegram channel link and join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other very important updates we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones and check their performance. And this is a 75 minutes high liquidity zone. This is a L&T Finance. This is a drop. We have a base candle and then we have a rally candle with a hidden body. At the hidden body, it's a rally. It's a very big ERC candle. And this is what identified by our software, this drop base rally. This is a 75 minutes high liquidity zone. So we need to fine tune with 15 minutes time frame. Here we have a 15 minute zone. See here you have a rally, you have two base candles and then again a rally candle. 15 minutes zone. Within this 15 minute zone, again we need to fine tune with 5 minutes time frame. So here you have a rally as a leg-in. You have two base candles and then again a rally with hidden body. And at the distal line of this zone, the fine-tuned zone, 15 minutes, even the 75 minutes, we have a 5 minute zone. See, we have a rally, base, rally, 5 minute zone. And this 5 minute zone is having overlapped with the 75 minute zone and also overlapped with this 15 minute zone at their distal lines. This is the point you should observe. And second important point, what you learned in lesson 22, a powerful concept, a new strategy. In the recent time, we have seen several trades, successful trades from that concept. Lesson 22, lower time frame zone as an horizon to the higher time frame zone. Having a very powerful, this 5 minute zone is having a horizon to this entire 75 minute zone. So such kind of concept we have drawn this zone. So we have two order flows. And today morning at 9:35 prices entered into this zone and it has given some push, but prices did not reach the target. Prices didn't reach the target. And after that prices turned back and this zone is violated. Is it reached 1:3 RR? No, it didn't reach. Because from this zone to here, we have 1:3 RR is there. If minimum 1:3 RR is there, we consider this as a successful trade. But unfortunately, this zone is violated. After that, the prices entered into this fine-tuned area. This is the zone they entered. This fine-tuned zone. And here we got the entry. And after that, the prices moved almost, it touched and maybe a little below. It is within the stop buffer, a very little below the distal line. And after that, sharply moved up and finally reached 15 minutes target. Here you have a 15 minutes target. You have a drop, 3 base candles and a drop. Again from here it picked up the orders and again moved. And today also it reached the target, and after that the 15-minute zone is violated. That is a different story. When it reached the target in this candle, 12:45, 15 minutes candle. If you go to the 5 minutes candle, we got the trade in this candle at 10:30. We got the trade, and it reached the target at 12:45. In 2 hours 15 minutes, the trade is completed. And how much profit it has given? And how much stop loss it has given? LTF has given 2,000. First trade it has given 2,000 rupees loss. This is the one. The fine-tuned 5-minute zone. Next 5-minute zone has an horizon to the 75 minutes high liquidity zone. That trade has given 13,475 rupees profit, which is 6.4% return on the investment it has given. Because many times we have seen lower time frame. That's why I developed that new concept in lesson 22. Because I have seen they are working like high liquidity zones, these concepts. It is a new concept. I developed a lower time frame zone as an horizon to the higher time frame zone. That is what you learned in lesson 22. Almost 4 months back or 3 or 4 months back, I have released that concept. Lower time frame zone as an horizon to the higher time frame zone. A very powerful concept. Many times we got successful trades. We have seen many trades. 5 minutes demand zone as an horizon to 75 minute zone. 5 minutes demand zone as an horizon to the 75 minute zone. 5.9% ROI it has given. Five-minute supply zone as an horizon to 75 minutes high liquidity zone. 17.2% ROI it has given. 5 minutes demand zone as an horizon to 75 minutes HLQ zone. 5.2% ROI it has given. So that's why I'm saying in recent times we got to see here 5 minutes demand zone as an horizon. 2.3% ROI. This is the least one we got. But see here, 5 minutes demand zone as an horizon to the daily high liquidity zone, 8.9% ROI it has given. 5 minutes, this is aggressive trade. So like that we have got several trades here. 5 minutes supply zone as an horizon to 75 minutes high liquidity zone. 3.5% ROI it has given. Many successful trades we got in the recent time. All these are all recent trades. Such a powerful concept. That is what you learned in lesson 22. Why I am stressing on this point? The new concept, the supply demand zone traders are not known about this concept. Probably from our video, some trainers, because some of the supply demand zone trainers also following our channel. Couple of them also interacted with me. Now they will be following this. Probably in their training programs they will be including this concept. Because it is a powerful concept. Because we are having the software, I already tested this concept rigorously. Probably those who are learning newly, especially the trainers, some more time they will be testing this concept and they will include in their curriculum. But you guys already learned this concept. You've been using this concept. And we have seen a great success from this concept. Some of our paid subscribers are already using this concept. They got profits earlier also. So that's why everybody focus on this. The reason why I am stressing some people until lesson 21 they learn and stopped your training, learning the concepts. No, you have to learn all the training lessons. You never know when you are going to use. And moreover, lesson 22 is integrated with HLQ zone strategy. That is the point you have to understand. You should not stop your training with lesson 21. You have to learn even HLQ zone also, concept also explained. TCO, trend change horizon. That is a very powerful concept. Though I am not discussing those trades, previously I discussed in couple of videos. Why I am focusing HLQ zone strategy, high liquidity zone strategy is because it is working it is giving a very effective trades for us. Losses are minimal. Success rate is huge. If you look into this current month, see how many trades we got so far. And moreover, in October month, the trades are very good because the ROIs are very high in October month. See, so far we got 52 trades we got so far in October month. We have 3 more days to complete. And so far 5.7% ROI it has given out of 52. And 9 trades are failed so far. Out of 52, only 9 trades are failed. And the successful trades are 43 trades so far in the month of October. When you have such a huge success and see many successful trades, they are given more than our average ROI 6%. Many trades, even including today. Maybe overall average ROI is 5.7 so far. Maybe because of these failure trades and a few trades, we got couple of trades in some stocks. And each trade I am counting separately, even though the trade is from the same zone. Because of those reasons, it looks like ROI is slightly below our 6-point average ROI, but 5.7 is a huge success. So that is the reason why you should focus on all the concepts you learned. You have to focus on fine-tuning the zone. You have to focus on lower time frame zone as an horizon to the higher time frame. You have to focus on aggressive trade setups. Aggressive trade setup, you have different price action clues. You should also focus on HLQ zones, any lower time frame HLQ zones. At least multiple tests are there in any zone. You can also use that zone as an aggressive trade setup. Until the zone is violated, you can trade on that zone. Of course, sometimes the zone has to be violated. That day you have to take that stop loss. But until that time, you will enjoy the profits. And you know, what is the losses we are getting? See, -1, 0.4%, -1%, 0.7, 0.4%, 0.1, 0.4%. And 1.1, this is the highest percentage during this month, 0.8. That's it. When you are getting the losses, you are getting minimal losses. But when you get the profits, you are getting big profits. This is the power of the high liquidity zones you should understand. Why for last 1 year I keep on analyzing these stocks? Because here we have the opportunity, huge trading opportunity in these zones. Sometimes while fine-tuning the zones or finding the aggressive trades, you may make some mistakes because you are in the initial stage of learning. But from the mistakes only you will be learning. Nobody get the subject perfection right from the day one. First we make mistakes in the initial stage. Those mistakes should not make your confidence go down. Those mistakes should make you become even more aggressive. Then only we will become a good traders. I know everybody, I have seen people, from the day one, you expect the profits. That won't happen. First 2-3 months, minimum 2-3 months it will take. Sometimes you will suffer with losses, but losses are minimal. That is what you have to understand. Because if the risk is high, you won't take the trade. See, maximum acceptable risk is 2%. There is no rule that you have to accept 2%. You can accept only 1% or 1.2% or 0.8% or 0.7%. Beyond that, if you are getting losses, you don't take the trade. Of course, you will be missing some trades. But you have to accept because your risk is very strict, very, very strict. With the discipline, in initial stage you may get very few trades. That is good for building your confidence. But I have seen people are expecting to become rich from the first month onwards. It won't happen. It is not reality. Reality is initially at least 2 to 3 months until we adjust with these concepts to get perfection, to understand the real-time issues, we will suffer. Sometimes you may get profit continuously. 1 week, 10 days, your analysis works perfect. After that, your analysis you may make a mistake. Your trade will be stopped out. But anyway, it is a minimal loss. Because of that minimal loss, you should not disturb your mind. Because all these days you enjoyed the profits. Enjoying the profits and one stopped out trade, and if you disturb yourself, how do you become a good trader? The way how you are enjoying the profit, the same way we should also enjoy the loss. Whenever the day, why we should enjoy, you may ask this question. Because it is a learning. It will make you think better. Because you feel like, why, what could be the reason for getting the loss? What kind of mistake I made? There are two reasons you get losses. Maybe you didn't properly analyze. Because of that, you made a mistake. You will be having a learning. You did proper analysis. See, today we did proper analysis for LTF. We have a fine-tuned zone. No, there is nothing wrong to say this zone is not a good zone. This is a very good zone. Rally base, rally, a fine-tuned 5-minute zone. And before prices are coming, they were started moving. All these are all indicating there is a strong order flow. See, that's why, see, when the prices came, it is able to hold the candles. And also it is able to push. But institutions, they decided they need to violate. See what they did? Rally base drop they created, and they made sure they increased the power of this supply. Until this zone is violated, they were pushing the supply. Finally, the zone is violated. And one way this zone helped the lower time frame zone as an horizon to higher time frame. What way it helped? It consumed majority of the supply here. And by the time prices reached here, still supply is very strong. But here, lower time frame zone as an horizon to higher time frame is also having strong order flow. By the time it reached near the digital line, it consumed all the supply. There is no more supply. And only demand is again pushed the market up till its 15-minute zone. After that, even this is also violated. It moved further up. But this is the place it reached our target. We will be exiting. And those who are expecting higher, probably they will be using fine-tuned 5-minute zones. Here, this zone, rally, base, rally is near to this zone. Probably you will keep this zone instead of 1-minute zone. Because this is very near. When this is very near to the zone, relying on 5-minute zone is much better than 15 minutes. And this 15-minute zone is not violated at all. See, it took the support from this rally base, rally 5-minute zone, and then started further moving and violated this zone. That way they would have got even more profit. I'm talking about those people who wants to aim for more profit. Probably some of these techniques they will use. But we already reached this 5-minute, this zone, and that way we got 13,475 rupees up to this area. And moreover, from this zone to this zone, we got 3.5 RR is there. From this 5-minute zone till this 15-minute target, we got 1:3.5 RR, which has given 13,475 profit, which is 6.4%. ROI it has given. With stop buffer, we got 1:. Okay, I didn't draw here. I deleted it. But let me show you. That is also important, especially for the people who are learning. The long position. Approximately I am keeping some stop buffer here. It may be a little above also, your stop buffer. But still you get your RR. See, this is your entry. And this is your target. You got 1:3.3. Probably I added more stop buffer. Maybe that could be the reason. Slightly reduce. Because when I calculated, it was exactly 3.5. So this is what 3.5 RR it has given. See how from the digital line, how it pushed the prices up till the 15 minutes target zone. Okay. So this is about L&T Finance. Next one is RT Industries. We have a stopped out trade. That was a very unlucky trade. Just stopped out and then immediately turned back and came down. Otherwise, it could have been a very good trade for us. Anyway, this is a 75 minutes high liquidity supply zone. We have a drop, base, a drop. Don't wonder, this is looking like a base candle. At some point, it is looking. Actually, this should be considered as a drop because this is a medium size candle. This is another follow through candle. That way, software is having some intelligence to calculate this is a zone. Not only leg out, the follow through candles also it look. The algorithm is a little complicated algorithm or software algorithm. You might be wondering. Okay, by the time it calculated combining, it assumed, okay, the drop candle is completed and then there is a follow through candles. So far I didn't get into that concepts because they are software specific concepts. I didn't go. But remember, software is much powerful. When it comes to your individual analysis, you will be missing these zones. You will ignore these zones many times. The reason why you ignore, because there is no proper leg out structure you are seeing here. Rarely you see such kind of zones. But software is not like that. It will analyze. Because the algorithm, many exceptional scenarios from our existing supply demand zone I have included here. Okay, anyway, drop base drop. And both candles together, it is a leg out candle. Next 15 minutes time frame, there is a fine tuned zone, 15 minute zone. We have a rally, 2 base candles and a drop candle. This is the 15 minutes fine tuned zone. Within this 15 minutes fine tuned zone, there was a 5 minute zone. See, we have a drop, 2 base candles and a drop. Earlier I thought rally 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5 base candles. 6 base candles, not 5. 1, 2, 3, 4, 5, 6. But when we draw like this, the risk is very big risk. So I convinced it this is a leg out candle. Medium size leg out candle and follow through 2 base candles and a drop candle. See what happened today. Prices reached and then further moved and even it is violated the stop buffer and moved a little up within the 15 minute zone and sharply prices came down and came down and came down and finally reached the 15 minutes target also here. This is the first 15 minutes target. This is the second 15 minutes target. Even it reached the second 15 minutes target sharply. Such a big move we missed because our trade is stopped out. We have to accept there is no other option. Such kind of things you will see once in a while. I remember this kind of trade we have seen around some 4 or 5 months back. But again it happened today. 4 or 5 months back we discussed actually this kind of trade. It went a little beyond our stop loss and then again came back. Rarely you see. That day you have to accept there is no other option. And moreover this zone risk is also very minimal. You have only 50 paisa risk is there. And the lot size was for Arvind, for RT Industries, RT Industries it is 1000. So we got 500 rupees loss. So here you have RT Industries has given, hit the stop loss and gave 500 rupees loss which is 0.4%. This is the minimum loss. If you are adding more and more risk, probably you get more loss. See, always the loss point of view, I am calculating the minimum loss. Because how much risk you handle, that's all depends on you. Okay, this is about RT Industries, and remaining we didn't get the trades. So one is, but we will discuss two more. One is chumble fertilizers. This is a daily high liquidity demand zone. We have a rally 1, 2, 3, 4, 5 base candles and a rally candle. Within this zone, we have 75 minutes fine-tuned zone. Let me show you. See here we have a rally, 2 base candles and a rally with hidden body. Let me hide, you get better clarity here. This is a failed ERC candle I considered as a leg-in and 2 base candles. Again with hidden body there is a rally candle. This is a hidden zone actually. This is a hidden zone. Well, that is what you learned in lesson 9.3 and lesson 9.4 in our training videos. Hidden zones concept. It's a very powerful concept. Hidden zones concept. Next again we fine tuned with 15 minutes time frame. We have 275 order flows are there inside. Within that 15 minute zones. We have a fine tuned 15 minute zone here. See, this is a rally. See, you have a rally candle as a leg-in. You have 3 base candles. Nicely in a narrow range prices are moving. After that with a hidden body there is a huge leg out candle. High explosive leg out candle. And here also you see we have a drop 1, 2, 3, 4, 5 base candles and a rally. Or you can also consider this failed ERC as a leg-in 1, 2, 3, 4 base candles rally. It doesn't make any difference. This is another 15 minute zone. Both again I fine tuned with 5 minutes time frame. See here you have, I consider this as a drop candle, a base candle. Or you can also consider rally candle. These two are base candle. Either way is acceptable. And then you have a rally, very big high explosive rally candle. That is the first order flow. And another order flow is here. We have a drop in a narrow range of 1, 2, 3, 4 candles moved here, and then this is a rally candle. Actually the move started from here, again came, picked up the orders, moved up. So that's why this is the order flow. See, it's already tested. Not only here, again it is tested here. Prices went deep and again moved up. Maybe if institutions place add some more orders, again next time also it may act as a high liquidity zone. We never know. Or maybe next time it might be violated. Anything will happen. But here looks like drop, base, rally. Looks like. And who is the origin? This 5 minute zone is the origin for such kind of LOTL zone creations. So because of all these reasons, I am thinking maybe still there could be an order flow. Nothing wrong. Somebody can accept high risk. They can accept, look for another trade. It could be successful. Maybe it is violated. That also happened. Who don't want to go for a tested zone, they won't go for this trade. It's all depending on the individuals. Unless we take the risk, we won't get the rewards. But anyway, today prices did not enter into the zone. So that's why we didn't get any trade opportunity today. Prices didn't go. This is about chumble fertilizers. Next one is IEX. IEX is a daily high liquidity zone. Previously, once I already explained how to fine tune this zone. So that's why directly let me go to previously probably on this candle. 24th October it might have generated, probably 25th October video we might have discussed this trade. Please check, maybe 24th, maybe here also it might have displayed, 23rd also. Please check 24th October and 25th October HLQ zone analysis. In those videos, I might have explained how I fine-tuned this zone. So directly I am going to 5 minutes time frame. Sorry. So this is the 5 minutes fine-tuned zone. Rally base drop. Still it is a fresh zone. Prices didn't enter into this area. So that's why we can plan a trade in this fine-tuned area. It's same as the analysis we did earlier. There is no change in the analysis. See, analysis will be changed after our analysis. If prices again move into this zone, again they create a new zones. Those zones we have to draw. But still the old fine-tuned area, still they will remain same. We have to use them as an order flows. So anyway, prices didn't get into this area, we didn't get a trade. So these are the high liquidity zones and the trades. Hope this information will be useful to you. Especially lesson 22, the importance all you people should understand. How many trades we got in the recent time. So many trades on based on the lesson 22 concepts you learned. I shown you in the Excel sheet. We already discussed it. So those who did not complete that lesson, please complete that lesson. That is the integrated part of our high liquidity zone strategy also, the same concept. Okay, let me take a break here. Thank you for attending this session. Let's all meet again in our next video.